Good morning. It's your favorite coach, Larry FX Academy. So today I'm actually still on our volatility 25. I'm actually on this to give you a preview on how our analysis so far is going on volatility 25. So now, if you would all agree with me, you would all see that initially we've come to understanding that the market is on a downward trend, but then what we simply marked out was that it has been creating lower highs and lower lows. But currently we have markets reacting to what we would simply call our range, our market range. So it's currently playing within this range, between this high and this point. And then when we go to the smaller time frame, which is the 4 hours time frame basically, we would find out that the market gave us a clear break of trend line at this point, which is this point here, on the higher time frame. So this is very important. So market gave us a break of trend line on the higher time frame, and this makes it clear. We saw market dropping to the downside, pushing up, dropping, pushing up, and then dropping again. So with everything market is giving us here, we are clear that markets would actually be touching this level anytime soon. So now, for us to go a little bit deeper in our analysis, we would simply get to understand the structure, which I've always been explaining in almost all the videos I've released these few weeks. Since market actually broke structure, I clearly told us that we had markets giving us a break of structure here, which clearly defined the trend, the change of trend. And then we got market breaking this trend line with a candlestick, with a good bearish candlestick. We got it retraced into this level and then continued the move. And then we can see that market also retraced to this point using this area. So that was actually where market reacted to. Yeah, so we'll see that market using this area, it did a retracement, and we got our entry on this retracement at this level here. Using that level. So using that level, we simply marked our stop loss and our entry, our take profit here. So simply marked our stop loss. You see what we risked and where the take profit would hit and all of that. So that was for this particular trade. Now after that, we saw that markets retraced. So ideally, we would have marked our level this way. This is what I would have ideally done. But after I've done this and market hits me out, because it gave me an entry at this point, and market hits me out, then I will clearly understand that, okay, market has taken that particular, this our level out. And then we now would understand clearly that market is no more playing with this break of structure here. In all of my analysis video, I try to make explanations so that we explain what has happened in the market. So it guides us to be able to understand what our anticipation and our analysis on the current market will be. You understand? So that is one thing I always do, and I believe it always helps you all to get a better definition of understanding the market better, and helps you to make better trade decisions. You understand? So that's it. So now, based on this break here, hitting our stop loss at this point, if we had dragged it through here, I had to now adjust it with this other previous break of structure. So what did I do? I simply came here and extended it. Now when I extended it, I actually love to use the wicks, not the body. to mark my Fibonacci. I don't know if some other persons may be using the body, but I use the weeks. So using the week, I actually was able to get this move. Using the week, I was able to get the move where the market told me that we got our reaction and rejection from this point here. So it was actually a very wonderful reaction. Well, we got our reaction and rejection from that point, and then we can currently see that market is breaking, has already broken structure at this point here. So now, having understood that, I would now delete this particular, I would delete it. Now, originally, I would simply just mark our entry here without giving you guys a lot of reasons why market reacted or giving you all extra confirmations that we would have gotten from this move here. But now I want to really do something so that I can help you with extra information. So what we'll do is we want to analyze point of re-entries we would have had between this move from here to this point, because this is a 4 hours time frame. So I know some persons might be able to take the long trade, swing trade, but for me, I would have not been able to take the swing trade. I'll have to be taking intraday trades between this drop to the downside. So that way, what I would have simply done was to go to the smaller time frame. Now, when we get to the 1 hour time frame, what can we see? We have to now look at the market structure. What is the first thing I'll be looking out for? The first thing I'll be looking out for is the break of structure from this point. The first thing I'll be looking out for is the break of structure from this point. So now, yes, the market is a little bit clear here, but I would want to go to the smaller time frame so that we can see things clearer, and that will take us to the 15 minutes time frame. You understand? So that will take us to the 15 minutes time frame. So let's go to the 15 minutes time frame and look at the market better. So on the 15 minutes time frame, we can now come here. So when we come here, we can clearly see that market gave us a liquidity grab here. You understand? Market gave us liquidity grab here, and then market gave us a clear break of structure at this point. This was a very clear break of structure at this point. So having given us that break of structure at this point, these things are very easy. It's not difficult. Most times when analyzing the market, most times a lot of traders just tend to see the whole thing as something difficult, but it's not difficult actually. It's very easy. Where you have to work on is basically, where a lot of traders have to work on is basically the psychology around trading, which I will still teach in some of my videos. I will still teach the psychology around trading. So now, what do? We come here, we mark. Now, using the strategy, we pick, this is our liquidity grab after break of structure. This is liquidity grab where market went to, that's liquidity grab. Then what do? We pick our Fibonacci 2 and we mark it from the high to the low. Now, when we mark it from the high to the low, where are we looking at taking our entry? We are looking at taking our entry at either the 0.618 level, which is this, or the 0.79 level. So we can see that market reacted from the 0.618 level, which is here. So now, having done that, now, while taking profits, we always love to take our profits from, I always encourage all my everyone who is using this strategy to take profits, all my students, to take profits from the, so I encourage all my students to take profit at this level. You understand? To take profit at this level. But then the ideal place to take profit is here. But this point actually don't get hit most of the time. Before market gets to hit that, It may either make reversals just like this, and sometimes these reversals may get back to our entry region. So my ideal point for take profits is this point. So this is it for this particular trade. That's what we would have done for this day. So that being the case, we will remove our Fibonacci, and we can now come down to the other area. So now on this one, we are looking for our entry. Now we've gotten this point. Now what do? We can simply mark our Fibonacci because we got our break of structure again at this point. And then we pick our Fibonacci, we draw our Fibonacci from this high to this low. So when we draw our Fibonacci from this high to this low, we can clearly see that market did not hit into our level. It just got into the 0.5 level, and there was no base. There's no base around here which would help us take an entry. There's a reason for that, but it's not there. When we see it, I will explain the reason for that. So actually, this is a trade we would have missed. So we won't take this trade. This is an X. You understand? We won't be taking that trade. Now, after market did that, market also did what? It created what we'll call our liquidity grab, which is this. It's created our liquidity grab. And then it created our break of structure. After creating our break of structure, what do? We simply mark our point A down to our point B. So when we mark our point A to our point B, we can clearly see again that this particular market reacted clearly from our 0.79 level. And then from that point, if you move to smaller time frame, you will get another extra entry here, but then I don't want to refine. I don't want to actually refine. So we get our entry from this point. We get our entry, we place our stop loss at the high, which is this point here. And then our take profit. Now I said something. Remember I said there are times our take profit can extend into this point, but I don't like taking profits here. We can see it just hit take profits here and then reverse. So I don't like taking profits there. I love to take my profit at this point here. So you can see market hit our take profit. So that's the second trade in that particular drop to the downside. Now, having gotten this trade, what do? We now move on for our next catch. We move on for our next catch. If you have any questions on this video, please kindly drop a comment on the comment section regarding your question, and I'll do well to give you a feedback, a reply on that question. All right, thank you guys. So now, that being the case, we had entry here, and then we had this particular move. Let me show you guys the move. So what happened? We had on this point where market broke a smaller structure to the downside and reversed into that area. So what do we simply do? We just mark this break of structure here, and then we mark the high. We mark the point which created the retracement. And we can see what happened here. Actually, this trade actually got triggered, but it triggered with a peep. You understand? That is why I'm actually trying to narrow it very down. So you can see it triggered with a peep. So that was also it was a good trade, but very, very occasionally, if you didn't use a buy limit for this trade, I doubt you would have been able to catch this trade. If you didn't use a buy limit for this trade, I doubt you would have been able to catch this trade. So the take profit got hit. So that was for this particular trade. Our take profit got hit on this one. Now, that being the case, what do? We got market breaking structure again to the downside. We got this particular move. So we simply pick from this same structure, we extend our zone to the downside. Now, when we extend it, that was where I got this entry. So when I extended it, I got this entry. But now we have to be on this particular trading, I'm actually very transparent with all of you. I'm actually very, very transparent with our entries. So after I did this, our target was around here. And then what can we see? We can clearly see that market dropped into our direction but did not hit our take profit, and then it's reversed. Why did it do this? You can see a little break of structure here, a correction, and then it went to hit take profit. So there was an entry here for a buy, but we won't be catching our move. Let me just put it that we won't be catching that buy move because we are looking for sells. You understand? So even if I would have taken such trade, I'll be looking for more of sells. So I won't catch that particular buy move. Now what happened? Because it will always confuse you. When you catch that buy, you may now think of taking it extensively and then look at the sell that came. So now this one actually hit our stop loss on the first entry, and then what do? We were able to get the second entry, which came from here. We were able to get the second entry. Now the second entry came from this particular area. And then that second entry got to our take profit. So the second entry got to our take profit, and that was it for that one. And then after that, what happened? We moved on again. So after that, what happened? We moved on again. Let me just please let me click. Okay, very good. So we can see we actually moved on and we were close to this point of take profit. So what do we do at this point? We saw the same pattern we look out for, which is our break of structure. And then we pick this area of resistance and we mark it through. When we mark it through, what can we clearly see? We can also clearly see that market got into our level, tapped into our 0.618 level. We expected it a lot. So tap into our 0.79 level. We expected it a lot. 0.618 level. We expected it tested it again, and then it dropped massively, hitting take profit. So in this strategy, once you set your trade, just set it and leave it. Allow the market to do its thing. Allow the market to do its thing. So after it did this, it hit take profit at this point. And then what can we see? We can see market pushed up, broke to the upside, did a little bit of retest and just continued pushing to the upside. So while market was doing that, what do? We can now understand that this was the major structure we got that was broken, and market has not tested that area, which was this particular break of structure. So we can see market got into this area, which is our break of structure, and has not tested it. After hitting this take profit, and remember, this take profit also hits the final take profit, which was the overall take profit we were looking out for. And then what do? We'll now mark from this high to this low. And what can we clearly see? We can see that market created liquidity at this point here. When it was trying this move, it tried to fake people in. So if you had entered from this point, it would take you out and then tag the main traders, the main people who know what they are doing, the main people who understand the move of this thing, the way this market moves and the way it works. Tag them in and set them into profit, and then you regret that you entered early. You understand? So that is what happened here. And then market triggered us in. I'm currently holding a trade here, which I'll post the screenshot on the community. I'm currently holding a trade here, and then my target is this point. So that is that for this particular trade. So we have our stop loss here. And then our take profit. So that is where we have our take profits. That's where we have our stop loss. And then this is the zone we reacted from. So on this video, I really took my time to break everything down for you guys. This is how much I love to give you guys valuable information. You understand? This is how much I love to give you guys valuable information to help me and to help motivate me to be able to keep dropping such quality information for you guys. I would really appreciate you comment on the comment section with any question, anything you want me to do. Understand? Engage in the comment section, and also I would also appreciate you give me a thumbs up. Understand? Give me a thumbs up on the option there related to you on the, I think, on the right hand side of the video on YouTube, so that YouTube will understand that this content, a lot of you like the content and I'm dishing out value, so they will promote my videos they will share it to a lot of other traders who are struggling to get better knowledge from the market. Understand? So that's it, guys. Peace, everyone. Peace. All one love. Bye, guys.